Hello everyone, and welcome to the TradeShark weekly blog. Each week, we will take a look at a different set of trading tools found within the TradeShark software. In this week's edition, we will examine the Neural Index, a proprietary trend forecasting indicator found exclusively within TradeShark. Additionally, we'll examine Neural Index strength and highlight some techniques that all traders can use to incorporate predictive intermarket analysis into their trading approach. The Neural Index, located at the bottom of this chart, is a short-term predictive indicator, which determines whether a 3-day moving average based on typical prices will be higher or lower over the next 2 trading days, essentially alerting traders as to when a miniature trend will develop in the market over the next 48-hour period. Traders can use the Neural Index to spot a trend change as well as determine whether or not a directional move is likely to continue. This is valuable information for any trading style because it is a consistently accurate forecast, not a rigidly defined trading system. For example, on this chart for the British pound US dollar, I have simply added the Neural Index to the past month of market data. To demonstrate a couple of key points, I will also include TradeShark's predicted highs as well as predicted low values. Now, let's assume that I'm a day or short-term trader. A simple strategy would include trades in the direction of the Neural Index, my 2-day trend forecasting indicator, while staying keenly aware of the predicted high and low values to act as short-term entry points as well as profit targets. Also, it's important to note that if staying in line with the Neural Index output and a shorter-term trading strategy, I should probably look to take some sort of profit within a 48-hour period of opening a position. With that said, notice at the beginning of the chart how the Neural Index moves from red to green, signaling that traders should now look to get long the market. A trader using TradeShark would look to buy near the next day's predicted low values and target the predicted highs over the next 48-hour period, resulting in a 150 to 300 pip profit over those 2 trading days. On this day, however, we can see that we would have been a buyer. After that trading day, TradeShark's forecast showed the Neural Index in a red position. A trader could look to exit any longs and possibly look to go short. However, this is a great opportunity to highlight the Neural Index strength indicator that can help us gain further insight as to how traders should use these valuable predictive tools. Neural Index strength can be thought of as the raw value of the Neural Index. While traders always want to be aware of whether the Neural Index is in a green or red position, Neural Index strength can offer up additional information as to how strong or weak that signal may be. For example, notice how a seller in this market may have looked to go short near the predicted highs and likely made a small profit on this trading day. However, the following day's forecast again shows the Neural Index in a red or down position, signaling traders can look to stay short and target the predicted low value. But if we look closely at the slope of predicted strength, it is actually slanted higher. If the Neural Index is a 48-hour forecast, we can think of the slope of the Neural Index strength as an even shorter term signal. When the slope is up, expect the market to see buyers at the predicted low and target the predicted high values. When the slope is negative, like you see here, target the predicted low values and expect some short-term sellers at the predicted highs. In this example, the Neural Index is negative, but strength has already begun to slant higher. A trader would certainly not be looking to take any fresh short positions and ideally be looking to exit that short at a predicted low value or simply tighten a stop loss to reduce any risk on the trade. Once the Neural Index becomes positive again, the trader can once again look to go long, buying near the predicted low and targeting the predicted high values over the next 48-hour period. Further towards the right of this chart, We can again see these concepts quite clearly, with predicted strength slanted strongly higher as the market moves aggressively out of this consolidation, again signaling short-term buying opportunities near the predicted low. The output from TradeShark's Neural Index and Strength Indicator consistently forecast short-term trend direction with an extremely high level of accuracy. It is this technology and approach to markets that allows TradeShark customers to have a huge edge and consistently be aware of market conditions that lead to profits. In addition to being a great short-term trading tool, traders can utilize the Neural Index to confirm and manage longer-term trade ideas. If TradeShark's predicted moving averages forecast a trend change, traders can look towards the Neural Index for short-term confirmation. Additionally, they can use the 2-day prediction to manage the trade more effectively, adding to positions when the Neural Index is positive or taking away from positions when short-term weakness is forecasted. In this chart example for Apache Corporation, we can see that TradeShark's standard forecast had a few crossovers over a 2-month period, with a nice trend, but also a bit of choppiness. This is a great chart example to show how traders who utilize TradeShark's forecasts can consistently spot the best trading opportunities and avoid the marginal ones. At the beginning of this chart, we can see a very weak crossover from the software. However, TradeShark's Neural Index signals that prices are still going lower over the next 48 hours. No confirmation. It isn't until this crossover that the Neural Index is in agreement. A swing trader would look to enter the market on the next trading day, with the expectation that prices should move higher over the next 48-hour period. Almost immediately, the trade starts moving in the right direction, until the Neural Index once again becomes negative, signaling some price weakness over the next 48 hours. A swing trader would be well aware of this weakness and could take profit or adjust their stops accordingly. But notice how over the next couple of weeks, prices start to run flat and chop. TradeShark's predicted moving averages crosses above the actual moving average here. But again, let's take a close look at Neural Index strength to gather additional insight into whether a swing trader would want to take another long position. As we can see, the slope of predicted strength during that crossover is fairly negative. The Neural Index is positive, and in fact, average prices do continue higher over the next 48-hour period. But TradeShark users are well aware that a long swing trade would not be ideal, and certainly wouldn't be the best opportunity among all the other options. It's important to remember that TradeShark's Neural Index indicator only looks ahead 2 days, so the signals should be used in ways that make sense with your overall trading approach. However, traders who utilize TradeShark's predictions have a huge technological edge in the market. By understanding how to interpret the forecasts and learning how to identify the strongest signals, traders can take advantage of the best opportunities in the market. Whether you are a swing or day trader, TradeShark's consistently accurate short-term forecast can help you put the odds strongly in your favor. I hope you have enjoyed this edition of the TradeShark Weekly Blog. For additional information on trend forecasting and the technology that powers TradeShark, please visit www.tradeshark.com.